Hey guys, this is another episode of Ask Elena, and this is my YouTube channel where you can learn all the tricks and tips on how to survive in today's housing environment, housing market environment, mortgage environment. So today I'm going to talk to one dear friend, a dear friend of mine. Her name is Melissa, and she's a lender who I adore because she has all of those wonderful tricks up her sleeve on how to make her buyer's life easier. So today we're going to be talking about a very rarely mentioned way to help the buyers to buy in this environment, which is a high interest rate environment at this point, without necessarily having to go with a high interest rate. So she told me about this trick just a couple of days ago. I don't know much about it, so I invited her today so we can discuss this topic. So let me bring Melissa in. And Melissa, if you would introduce yourself.
Absolutely. Thank you so much for having me, Elena. I am a loan officer. I've been in the mortgage business for, oh goodness, over 20 years now. I work for Guild Mortgage, which is a mortgage lender, meaning we loan our own money and service the loans after the loan has closed. So that's one of the big things that distinguishes Guild Mortgage.
Perfect. Hey guys, I know that you're looking at her contact information right now. Don't try to write it down from the screen. I'm definitely going to copy and paste it into the description below, so don't worry about that. Now, Melissa, we're about to get started, but before we do you mind if I take just a second to let the viewers know where they can find the recording?
Of course, please.
Okay, sounds good. So if you're interested in where to find this recording, number one, it will be posted on my Facebook, facebook.com/elena.gerrit.kwc, where I post a lot of videos about how to save on a down payment, how to save on your mortgage, how to straighten out your finances, your credit, and what have you. Now, you also can find me on the various Facebook groups that I own, and I'm listing them here. I'm not going to go over them right now, but if you're looking to engage with me, pop on one of those Facebook groups, and I'm always there. Also, I am on Meetup. If you are on Meetup, then find personalized finance and real estate advice for DFW families. I'm posting so much information in there that's geared towards families who are struggling to break through in the financial world in terms of mortgage, in terms of savings, in terms of their wealth building, in terms of their passive income. So all of that information will be more or less regurgitated on that channel. And now my YouTube channel is called Ask Elena About Real Estate North Texas. So if you just type in your YouTube, search Ask Elena, you should already see my face popping up. But if it doesn't pop up, just say Ask Elena About Real Estate. Okay, perfect. Now, Melissa, all the attention is on you. So let me go ahead and stop sharing. So we don't, yeah.
Okay, so you want me to share my screen?
Yeah, go ahead.
All right. So we are going to talk about the secret trick to getting the seller to pay for your lowest rate. And the reason why I think this is important is because we're in sort of a unique market. I'm sure you would agree, Elena. This is different. After the last 2 years was just all about sellers being able to name their price. And if you were a buyer, the conventional loan and an extra $50,000 to buy a home, it was great. Interest rates were low. We're not in that market anymore. But we're still in a market where, based on the inventory out there, it shouldn't really be as much. It should still be a seller's market. But buyers are very reluctant to get into the market, which is shrinking the pool of buyers. And if you are one of those buyers out there still looking at homes or out there looking, you have an advantage because there aren't that many of you. And so this is turning it into a seller's market. Is that what you're seeing, Elena?
That's actually exactly what I'm seeing. I don't have the time to share the stats right now, but we went from about 40 showings per property to about 4 showings per property, as far as the MLS is showing, or showing time showing. So yeah, the sellers are now starting to feel the pinch of it, and they're starting to realize that every buyer is in a weight of gold for them.
Yes, no, it is. And so I think this is a market where, and the challenge for buyers is the interest rate, because the rates have gone up so fast, and to a point where they're I don't think we can say they're historically low right now. In the 4s and 5s, that was true, but once we're getting into the high 6s and almost 7, the rate is a challenge. So we have to find a way to overcome that. And there is a way to do that with the seller paying the cost to buy the rate down. So that's why I think this is a strategy that you should be thinking about if you're wanting to buy a house right now. So I want to look at a couple of scenarios and talk through why having the seller pay to buy down your rate, get you the lowest payment possible in this market, is a better strategy and is going to increase the odds of you winning a bid and having a lower payment than just going in and asking for the lowest price you could imagine asking for. Does that make sense?
That actually makes a lot of sense because most sellers will rather do a concession than a price cut.
Exactly. So let's look at an example here. So this is for somebody who's out looking for a home at a price point of $350,000. We're looking at an FHA loan, so 3.5% down payment. So let's look at what this looks like for the buyer. So that FHA loan last week would have meant an interest rate of 6.5. So that's the going rate for an FHA loan right now. That would result in a payment of $3,288. Now that's with an estimate for taxes and insurance. It includes the mortgage insurance. So that is the total payment. You might say that's too high. You don't want to pay that payment. So what you can do is ask the seller to pay a concession of about $8,000. It's a little less than $8,000. Let's say it's $8,000 and buy that rate down. Two different ways you can do it. One is temporary, one is permanent. So the temporary buy down has the seller take that $8,000 and what they're doing is subsidizing your payment so that you're paying an effective interest rate of 4.5 for the first year. That means that your payment would be $28.56 per month instead of $32.88. So you're saving $431 a month. That's much more affordable. And I think another reason why this strategy is good right now is that rates are most likely going to come down in the next couple of years. And when they come down, the good thing about a mortgage is you can refinance it. So you might have heard the expression, date the rate, marry the house, divorce your rent. That's this concept. You buy the house, you lock in that $350 price, and you have an interest rate now that you're going to refinance as soon as you can, as soon as rates come down to the point where you can. So at 4.5 for the first year, your payment's $28.56. Now the second year, the interest rate, the effective interest rate goes up to 5.5. The payment goes up to $3,066. So you're still saving $221 a month versus just doing a regular FHA loan. So the permanent buy down is also an option. So if somebody does not think rates are going to come down in the next couple of years, then you have that option as well. The same cost would buy that rate down to 5.875 and save you about $140 a month. Now, this is better than asking for a lower price because you would have to ask the seller to give up almost $25,000 to get that same payment. So this is what makes much more sense for the seller, and they're way more likely to accept the offer if all they're having to give up is $8,000. And the other thing is if you wait 2 years, let's say it takes 2 years for rates to drop to 4.5-ish. At that point, the home price is probably going to be slightly more expensive. We are expecting some appreciation in the DFW market in the next 2 years. I've heard 1% this year and then about 4 or 5% next year. But what happens when rates go down is, or what we're expecting to happen is that all of those people that are waiting to buy until rates come down are going to jump back into the market. And then you're going to be competing with 1 million people again. And that's going to make it way more difficult to get an FHA loan approved or a VA or USDA loan approved. And it's going to make it almost impossible to get any concessions from the seller.
I will actually second that. Right now, for the first time, I'm seeing sellers offering concessions right in the ad copy. say buy rates, buy down, welcome, blah, 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 bring us your offer. So guys, for those of you who watch the market for a while, maybe I know that some of you couldn't get in because you were outbid on every bid that you submitted. So you got disappointed. Now you're the market is much more favorable to you, but the interest rates went up, right? So it's almost like, if not one thing, then another. So this, this gives you an opportunity to buy not high, to buy low. So those people who were able to outbid everybody, they pretty much succeeded in getting the house, but they also bought high. Now for the next 2 to 3 months, at the very least, I can't guarantee after the first of the year, but for the next few months until the holidays are over, I do expect that the sellers will be more and more aggressive in offering concessions. So if you are still able to, and you're not locked into your rental agreement for forever and ever, then consider taking advantage of a lower priced homes with fewer competition, where the sellers are actually eager to negotiate with you on how to bring your monthly payments down. Because I know that some of you would have bought right now if not for the interest rate.
Yeah.
Anything else, Melissa? Do you have any other slides?
I do. I have some slides here. Just if anyone wants to know how this works,
Yeah.
Basically, the 2-1 buy down, it takes that $8,000 from the seller, and it gets put into essentially an escrow account, so an account that's set aside being held for the borrower, and then it's being used to subsidize the payment. So it's reducing the payment down to the point where the effective interest rate is 2% lower than the current rate for the first year, and then 1% lower for the second year. Now, the other cool thing about this way of doing the buy down is that if you refinance after a year, let's say you buy now, next October, the interest rates have dropped and you want to refinance. The seller gave you that money, you want to take advantage of it. Well, you still get to, because it's still sitting in that, everything that hasn't been used is just, it's sitting in that escrow account for you. And it will be applied to the principal balance of your loan when you refinance. So it'll be a principal reduction. So you don't lose it. With the permanent buy down, it's been used to buy the rate down in a more traditional manner. And once it's done, and there's no benefit if you refinance. So yeah.
And that is good for both conventional and FHA, right? And VA.
Conventional, FHA, and VA.
Well, VA is a 0% down anyway, right?
Correct. Yes.
Qualify. Yeah. Okay.
Yeah. But if someone's a veteran, that is just a fantastic product to take advantage of. With 0 down, no mortgage insurance, and this temporary buy down can be used for that as well.
Okay. So do you want to go to the next slide?
Questions?
So to me, let's just say an example. I have a couple of buyers who are shopping right now. They kind of put everything not on hold, but they're not looking as aggressively as they were about 3 weeks ago or 4 weeks ago before the last interest rate. Now, I also know that you offer interest rate locks. Can you tell me, just throw a couple of words about that too?
Yeah, so if somebody is shopping or wants to start the shopping process, as long as their loan is credit approved, so meaning it's gone through underwriting, we can lock that rate in today. And then that rate is good for 120 days. So that gives 90 days to find a property and then 30 days to close. Gotcha. So if somebody's worried about rates going up, that can be a good option. Gotcha.
So let's just say that unfortunately they didn't go with interest rate lock at that time. They started to shop, then they saw the interest rates going down. They kind of shrank their activity. They still go see about 1 house per day, but not per week. But now they say only if a perfect house comes along. Now, the perfect house typically has also a very cute house with multiple bids, right? Yes. So there's still multiple bids out there, even in this market. So from your experience, what kind of a seller would more likely to agree to this kind of negotiation?
It's the seller who maybe hasn't updated their home to look like it's HGTV ready. It's the seller who maybe hasn't had their home staged. So when you walk in it, if the walls are not the trendy colors, the countertops aren't the newest design, or the house is just kind of messy. I mean,
Mhm.
those are the houses where honestly a
They have-
buyer has so much more leverage because there
Mhm.
are not going, it's unlikely there are going to be multiple offers.
Mhm. So-
And I'll throw in one other thing. So
Mhm.
if you find a house that needs legitimate work and it's in the
Mhm.
perfect neighborhood, but it has not been updated, there are renovation loan products too,
Mhm.
where you can purchase the home and then roll in the cost of updating that home into the
Right.
mortgage, just one loan. So that's kind of a cool option for those
Mhm.
those
And you
homes.
offer those, right?
What's that?
You do offer those, right? The
Yes.
renovation loans. Okay,
Yes.
gotcha. Actually, you explained everything so well. I'm stumped for questions right now. To me, everything is pretty clear. Could you go back to the table again? I just want
Yeah.
to take a look through it.
Certainly.
Okay, so their purchase price is 350, and their interest rate, effective interest rate, so their actual interest rate is 6.5, right?
Yes. Yeah. And I do want to point out, so anybody that used one of these products would be fully qualified at 6.5. So this wouldn't be a situation where you didn't qualify at 6.5.
Mhm.
You qualify at 6.5. You know exactly what that payment is,
Mhm.
what it will be at year 3.
Mhm.
So it's not a situation where it's an adjustable rate mortgage and you don't know where it could go. It will go to 3,288 on year 3.
So
and it
that's a
will
good
be-
thing. So you know at the end of year 2, you know for a fact what your mortgage payment is going to be, assuming that you haven't refinanced yet, right?
Correct. Yes.
Now, do the sellers have any limitation on how much they can buy down your interest rate? So in this particular case, we took 2%.
No, they do not. And there actually is a 3-2-1 option as well. So if the seller is motivated enough to give a bigger credit,
Mhm.
that interest rate could be 3.5 for the first year and then goes to 4.5 and then 5.5 and then 6.5.
So
So that
Mhm.
is an option as well.
So generally speaking, if you find a seller who is motivated enough, and guys, if you're interested in motivated sellers, I can find a ton of listing that's a motivated seller in private remarks between the realtors. So if you're interested in taking advantage of this loan, we might actually be able to get you even better result than this one, right?
Yes,
If the
absolutely.
seller is motivated enough. Mhm.
And something else that I think it's good for buyers to be looking at right now is if they see a home that has a price reduction,
Correct.
that's an indication that that seller is
Is
motivated.
motivated, yes, always indicates
Yeah,
motivation.
and it might be better for the buyer to offer, let's say
Full
it drops
price.
10,000, offer 360, ask for the
Mhm.
3-2-1 buy down, and it's
You will
probably
still
going to
come
be
out ahead. You'll still
probably
come out ahead on monthly payments, right?
yes, absolutely,
So
absolutely.
I can kind of see how a seller who is really reluctantly drop the price just to attract more buyers, how they would gladly take more money.
Yes, absolutely. So it
Uh,
works out the same to them.
That's an interesting idea. That's a really interesting idea. I need to talk to a couple of my buyers. Okay, then I don't have any other questions now, guys. If you have any questions to Melissa, you are watching this video, whether it's on Facebook or if you're on my whether you're on my Facebook or on my YouTube, feel free to drop the comment below the video and I will make sure that Melissa gets it. Also, Melissa's contact information is going to be posted in the description of the video. So for right now, I think we're good to go. I'm looking forward to doing more videos with you. If you have any other tips on how we can prevail in this market, how we can actually get some people who desperately want to get into a house, finally into a house, just continue to send me your ideas and we'll do more videos together.
That sounds perfect. I like it. Thank you, Elena.
Thank you, Melissa. So guys, I'll see you in the next video. Stay tuned.
Okay, bye.
Give me 1 second. I'm just going to stop recording.
Okay.